In today's video, I want to break down some exciting news that's happening in the market. If you're watching this channel, you know that it's the till. It's truth in lending in life. And you're most likely keeping an eye on the market. So I want to give you an update of what's happened over the past week. We've seen mortgage rates hit levels that we haven't seen in nearly 3 years. Home affordability is the word of the day. It's the word coming out of President Trump's mouth. Essentially, he's going to be in Davos next week, and he's going to be talking about home affordability, and that's beneficial to a lot of my clients and a lot of people that want to buy homes. So let's get into how some of those details can play out. So if you're watching the channel and if you pay attention to a lot of the other YouTubers out there, a lot of them will use the Mortgage News Daily as a pinpoint for where rates are. Keep in mind it's an average, and the data that they're using is 75% loan to values and 780 credit scores. So if you want something that is a little bit easier to use, you can go to my website right on the first page at live rates. It'll take you to a page, and literally you can put in purchase, 500,000, 25% down, zip code, and hit submit. You can change that criteria to whatever you want it to be, but in just a few minutes, it will give you where live rates potentially are. 5.625 is actually paying back 0.213 with one of my lenders, and that compares to 6.04 that they're touting. Now, what I found interesting was there was an article that went into how much money do you need to buy. The median average home last year was $414,000, and so this article went into that, and it was dated, and it used some key points. One was 6.6% interest rate, which might be the case with someone maybe with worse credit or something of that nature, but someone with good credit, I'm going to get into whether or not this $118,000 needed is accurate. And then more importantly, this $80,000 over the life of the loan that you could save just by shopping, okay? So let's do the first one first, home affordability here. So I did a comparison on 414,000. I did a conventional, I did an FHA and a VA loan. So I did 5% down on the conventional, and you see $20,000 down payment. Closing costs across the board on all three products are about $9,400, and escrows roughly $3,300. So conventional 5% down on this 414, you would have needed $33,469 to be able to buy a house. FHA $27,700, and the VA $12,500. VA is the best loan around if you're a veteran. It helps get people into homes earlier. So VA and FHA government subsidized around 5.25% rate today, and then that 5.625 accordingly on the conventional. So here's the thing. These payments, roughly $2,822 to $2,762. So what income do we need to cover those? Depends on the back ratios, right? Back ratio is your housing ratio, which is that payment we just talked about. It's right here, this $2,862. And then any additional debts you have, car payments, student loans, and all that, added on top of that, divided by your gross income, right? So if the lender allowed 45 back ratio, which all of these products allow up to a 50. Okay. So in some of these instances, you literally could be able to buy a house, 414,000. The math on that, on the high side, on the 46, 45%, 62, 71, 12 times. $75,000 roughly could get you into a house with 5% down if you had that money, or you could also get a gift. Seller can pay closing costs, prepaids up to 3%, FHA 6%, and 4% on VA. But in general, the $118,000 at 6.6 versus a potential as low as $75,000 to be able to buy that $414,000 house, I found that pretty interesting. The other thing that I found interesting is if we compare a $400,000 loan at what Mortgage News Daily 6.04 versus a $400,000 loan at 5.625. And we have the same closing dates here. We put those in. So here, the difference, if you shopped interest rates and found someone at the average versus the 5.625, such as myself, you would save yourself by shopping $76,000 over the life of the loan. So in general, that article was pretty accurate when it said shopping for mortgage lenders can save a homeowner 80 grand. That was just versus the average, not if you found someone, unfortunately, your realtor recommended somebody that was at 6.25 or 6.125 and you didn't know any better, that 80,000 could be magnified to be a much larger number. So let's get into the current market with refi rates, right? So I do a lot of no-cost refinances, okay? So I had a client that bought in March of this year, $494,000. Their current, and a year later, they owe $488,000. So they put 20% down. The current interest rate, they could get 0 points at 5.625. They could get a quarter credit at 5.9, and they could get at 5.99 a credit of 0.712%. And what I want to show you is exactly what that represents when it comes to savings on the mortgage, right? So when it comes to doing all of that, currently they currently owe $488,951. So let's call it 489. On 489 with a 0.71 credit, they would actually make $300 right here doing the loan. What would it save them at 5.99? It's going to save them $191.40 in principal. So I'm going to bring up this grid here, just a little bit easier for you to read and not get confused with all the numbers. So this deal is essentially a no-cost refinance for my client. And I want to walk you through some of the things that happen with a discussion when it comes to no-cost refis on a daily basis with me. First, some clients will say, Kevin, I don't want to go backwards. Well, you never go backwards when you're doing a no-cost refi. If you would like this particular spreadsheet as a calculator, happy to send it to you. Just in the comments, put your information for me to be able to send it. Say calculator, and I'll send it to you. Or text me at 703-201-6138. Text me the words calculator, okay? So I've made millions of dollars off of this calculator, and it simply takes what your current loan is and what then you can get for free and what it saves you in different ways, right? So for the person that says, I don't want to go backwards, I love you, but you never go backwards if you're doing a no closing cost refinance. If you get a credit that covers all your closing costs and nothing, you're not paying any of those one-time transactional fees out of your pocket, the lender gives you a credit that covers all those, you're never going to go backwards unless you choose to, and then you have to use this calculator to figure out the math, right? So if you paid $39.63 of the savings, your loan pays off the very same month as your current loan. So you can't go backwards. Now, that's option one that you have. If you're super smart and can afford the payment you have now, pay what you're paying now. That is equivalent to paying your loan off in 307 months, 41 months earlier, and you save the interest on that for those remaining 41 months that you would have had to pay. So is doing a no-cost refi worth saving 41 payments? Absolutely, every single day. Now, the other thing that you can do is just, with most of my lenders, do a 29-year loan in this situation. Save the $154 a month over 29 years, and you didn't restart your clock at all. If you want to make everyone happy, set it up for 28. Put the $100 in your pocket and go out to eat once a month to a nice dinner with your wife. Nevertheless, you never go backwards when you do a no closing cost refinance. Say that a million times. So if you're one of those people saying that you don't want to restart your clock, right? You don't. And I'm going to give you another great piece of education here. If you had two loans and you were just comparing the interest rates from one loan to the other, right? And a lot of people don't understand that a lower interest rate loan pays more to principal in the earlier years of a loan than just going to get this set up for you. Give me a second here. So for all you that don't want to start your clock over, I want to teach you a little bit about amortization, okay? So here's my spreadsheet that I use every single day, like I've talked about. On a $400,000 loan, someone says, what do I save if I save 0.5%? I'm going to say $2,000 a year. And so most people will take $2,000 divided by 12 and say, oh, I'm going to save $166 a month. And I'm going to say, yes, but here's the thing. You save two ways. One, you save by paying $39 extra to principal. And two, you save payment $127 per month. So if you took $127 per month that is $1,524. So when I say, you said I was going to save $2,000, the difference is in paying down more principal. And what I want you to look at here is if you were able to save 0.5% on $400,000, you would save $91,000 over the life of the loan. $45,000 of that is right here in that payment that you get on a monthly basis that you get to live on and enjoy, right? The other $39 paid down your principal, and therefore the very next month you paid a little less interest and a little less interest and a little less interest. So this saves you more money over the life of the loan because of the compounding effect of paying more to the mortgage and it compounding over the 30 years and pays it off and saves you more money. So in the end, always do a no-cost refi every chance that you get because it's going to afford you and your family to grow financially and have more wealth to be able to hand down to your heirs. My name's Kevin Retcher, owner of First Meridian Mortgage. I know this video covered a lot. Please do me a favor. 70 to 80 to 90% of the people that watch my videos tell me they watch them, but they don't subscribe. If you could do that, I truly would appreciate it. In closing, always do a no-cost refinance every chance you get to be able to save 3/8 for free. If you ever need a quote, you can check out my website. You can just give me a call. I answer my phone. Here's the thing. I've been in business for over 30 years. I've done over $3 billion worth of loans, and I'm always looking for new investors that are sharply priced where I can do no-cost refis effectively for you. Again, my phone number is 703-799-5626. I look forward to serving you.